You're listening to the Real Estate Runway podcast, powered by Quattro Capital, where we are all about alternative business and investment strategies to help you amplify life and maximize wealth. Here's your host, the recovering engineer turned multifamily investor, Chad Sutton.
All right. Hey, friends. Today, we're going to be talking on a little bit different topic, still real estate, but focused on short-term rentals, kind of the what kind of property you buy, how you manage it, how you deliver the best guest experience, and how you stand out in a crowd with marketing in a world of all these different short-term rentals. So, newsflash, it really is all about appealing to human emotion. The guest we're going to have on today is Mr. Shawn Moore, who is the founder and CEO of Vodyssey, which is honestly probably one of the only short-term rental education companies that I've ever seen. Check them out at vodyssey.com, and let's get right into this episode. Here we go. All right, everyone. Welcome to another episode of the Real Estate Runway podcast. I'm your host, your fearless leader, Chad Sutton. Just kidding, but I am here. Good to see you all again. Good to hear you all again. We're joined today with a very special guest from the short-term rental housing industry. And before we get to Shawn, if you get any value out of this podcast, folks, scroll down in whatever modality you're listening to. Give us a 5-star review. Write us a thoughtful comment. It really helps us get our messaging and our content out to more and more people. Appreciate you. It's all about you, the people, the listeners. So, Shawn Moore, welcome to the show. Shawn is... I'm going to pause there for a second. Lost my notes. Okay, resuming. Shawn is the founder and CEO of Vodyssey, the #1 short-term rental investing education company in the country. So, Shawn, we've never had someone on here talking about short-term rental investing, so I'm so excited for this. How are you doing today?
Awesome, Chad. Doing great. Really, really appreciate you having me on today.
Absolutely, brother. Coming to us all the way from Utah, right?
Heck yeah. Mountains in Utah.
That's a beautiful part of the country. So before we get into kind of the meat of the episode, man, tell us who you are. What do you come from? What did you do before real estate? And why in the world did you get into educating about real estate and rental housing? Let's get into that.
Yeah, great. We're going to have to go way back. I've been a full-time real estate investor for 22 years now. So that's, I got right into real estate right out of college. So went to college, got a degree in business management, but really was playing basketball. I played Division I college basketball back in the day, and those were what I call my glory days. That was a hell of a long time ago, but we still that's kind of my claim to fame, right? So, but right out of college, I actually got a job as a rep for a steel service company. Lasted about 6 months, and started getting into real estate investing. I met a real estate investor. In the area that we were living in at the time. It was Denver, and went and wholesaled the deal and couldn't believe it. And the rest was history. I made more in that wholesale deal than I ever made. Like I made at the time, my job was paying me $31,000 a year, and I made $19,000 on this wholesale deal. And I was like, I'm doing this. This is way better than working every day. Right. And so, obviously lots of ups and downs in between that, in that time, in 22 years, been around the block in a lot of different asset classes, a lot of different things. Really spent the majority of my early career in fix and flip properties, rolled into development deals, and got into bigger and bigger deals, got into resort properties back in about 2006 to 9. And that was my introduction into kind of the vacation resort style markets, and had a property at that time that I had as a short-term rental. Wasn't really considering it as an asset class, wasn't really considering it as anything other than just supplementing a vacation home. And went through some hard times, lost a lot of things during that time, actually unrelated to real estate. We lost everything in 2009, but it was because the resort that we were developing and working on, the two guys that were the head of the resort got indicted on securities charges. So it was just this abrupt, like, FBI shows up in the office, shuts everything down. And we were like, what in the heck just happened? And, I was had been around the real estate for a while, but I sat around and blamed everybody. I played that victim role. And I don't know if anybody else has ever done that besides me, but it was, I gave myself a 6-month pity party. And in that time, I lost everything. I lost my house, my cars, everything except for one property. I didn't lose that vacation home. I didn't lose that home in the mountains in Utah that was renting out. And still at that time, as we started putting things back together, I got back on our feet and got back things rolling, and but had that property the whole time. And so this was always in the back of my mind, and really just didn't roll into short-term rental investing until about taking it real serious from about 2012 to 15. And that's all we've ever done since. But it kind of, what led me to it was more realizing that, man, this was a really hard time in real estate from 2008 to 2011. And this was an asset for us that performed really well, and really started to unpack that type of an asset, and then, try to learn it and grow it, and to what it's become today. And in 2015 to 17, I started putting together what is now known as Vodyssey, which is our education company. But we still, we're active investors. That's all we've ever done. And is we pay our bills by holding passive investments in real estate. Now our entire portfolio is built around short-term rentals, and we have a lot of fun with it.
That's an incredible story. And, it takes, I feel like anyone who's gone through any sort of a loss scenario has just a better business acumen, better outlook on life, better judge of character. And it sounds like what you went through wasn't even a factor of your projects going bad. It was a factor of people maybe making some not so smart choices along the way that had ripple effects. So thank you for sharing that story.
Yeah, absolutely. And, but to that point too, Chad, I mean, what I learned back then too was, maybe they made some bad decisions, but my decisions led me to losing everything, not their decisions, right? My decisions of, spending more than I made, and living really high on the hog, and being this cocky 30-year-old that thought I could make as much money as I wanted to. And then sitting around for 6 months saying, hey, this wasn't my fault, so this can't happen to me. I mean, those are my decisions, right? That was my decision. And that led to me actually losing everything. And when you're in the middle of it, you don't feel like it's your fault. You don't feel like but now looking back, it's a great lesson to say. And to your point, there's so many people that have, when you go through those bumps and you get those bruises and you've had those hard times, there's such great learning experiences for us. Not that we ever want to wish that on anybody. It's not that any of us want to go through that pain, but without that pain, there's not a lot of learning things that we can go through, so that the next time we make it, we don't make the same mistake.
Not that we were talking about mindset and growth, but that is a great plug for, owning your mistakes and taking, the hard times are an opportunity to learn, folks. Whatever we're going through, it only helps us grow. I love that.
Yeah, absolutely.
Well, Shawn, on to the meat of the episode. So it sounds like we're going to kind of take a three-pronged approach to understanding short-term rentals. First of all, the right asset, the right property, the right location, the right rentability, right? Understanding how to deliver a unique experience to the guests, as ultimately that's what you're selling, is an experience. Yep. And then finally, how to market the property and stand out in a crowded space, So let's lead off with prong number one. How do we even start to look at a piece of property as a short-term rental investment? What attributes, what location metrics? Like, let's just start with the nitty-gritty.
Yeah, absolutely. And to your point, it is definitely a three-pronged approach. We need to understand how to buy that right asset is the very first part of that process, and identifying locations and property types that work for this particular, the game that we're playing in short-term rentals. And it's interesting because there's a lot of ways that you can dice up and slice up the pie and figure out where are the best the most investable markets, right? Where the numbers look the best and all these different things. And I always challenge people to first start with an area that you would love to own a vacation home. And people are like, especially my really, sophisticated investors, they're like, come on, Shawn, this is not what I'm paying you for, right? Don't tell me that to just give you these areas, because I always say there's good properties and bad properties in most markets, especially if there's any influx of travelers to an area, it has the potential to do well for short-term rentals. Doesn't mean there's not better areas than others, but we want to start with areas because it's going to trickle down to how are we creating a unique experience. If we're part of our target audience, we're going to do a better job of that. If we understand our target audience, we're going to be able to articulate that in our marketing. So when I tell people, start with an area that you would love to own a vacation home, let's get a handful of those areas. Then we are going to start to look at the data in the area. Who's coming there? What are the major profit drivers? What does the seasonality look like? What does the nightly rate look like? And the average, there's always a revenue range for short-term rentals. There's quite a wide range of revenue for example, if I had a 3-bedroom, 2-bath house in a certain area, and we're analyzing the investability of that area, it's not as simple as, hey, there's a 3-bed 2-bath house for a long-term rent, and that range of what that property is going to command as far as a long-term rental in a certain area is going to be pretty consistent with the other 3-bed 2-baths in that area. Short-term rentals actually have quite a wide range. Like you and I could both own a property on the same lake in the same area. We're next door neighbors. So same location, same property type. And one of us could be making double the money the other one can make. So we have to understand what that range looks like, first of all. And we want to know, okay, is that range wide enough? Sometimes that range is narrow. Sometimes that range is pretty wide between the middle or the top and the bottom. And I want to see an area that has a little bit wider range. So when we're running average nightly rates and occupancies, we're looking at a wide range of a market, a swath of a market, to say, okay, now these areas that I selected, can I go into that market and can I make money somewhere in the middle of the market? And what kind of upside do I have? What's that range look like to make it to the top of the market? And that's how we start to identify what our profit potential can be for a short-term rental. But really, we dumb it down and we really simplify it and say, build a portfolio of properties in areas that you would love to own vacation homes, and we'll show you how to identify whether it has profit potential in those areas. We use tools like airdna.co, and that is .co, not .com. That's a really great analytics tool. They have a free version. You really need to dive into the paid version if you're going to pull any granular data out, which you should, to find those ranges. So it does get more sophisticated than just go buy a property in an area. That doesn't work either, right? That's just rolling the dice. We have to have some data to look at. We have to be able to put all that data together to paint a picture of, is this an investable market for us? But we really start with some of those simple questions, and then we start to identify, where do properties fit in that I'm looking at here? Because the ratio you're really looking at, Chad, is what is my acquisition price and what's my revenue potential? It's the same ratio that we look at in almost every real estate investment, right? But the revenue potential in a short-term rental is a little more difficult to identify, because you've got so many moving parts. Your occupancy changes, your seasonality changes, your nightly rates change, and they've changed throughout the year. And so we have to be able to grab all that, compartmentalize it, and say, okay, here's my revenue potential, here's my acquisition costs, so that we can make some of those buying decisions.
Yeah, it's incredible. So, and we're really focusing on the income in this conversation, as we should. I know there's going to be, let me back up. On the expense line, is that a more predictable scenario? Before I go back to my questions on income, is the expense line pretty much the same as you would find in any other real estate situation, or what differences would you see?
Yeah, so the fixed expenses are very similar, right? There's a few fixed expenses like permits and stuff like that are a little bit different for short-term rentals, but overall our fixed expenses are very similar. What's very, very different are the variable expenses. And that's going to include your management fees, your resort fees, your taxes, your nightly rate, your hospitality taxes that we're talking about, or cleaning fees. All of those different things are variable expenses that are going to be completely different than what you would see in traditional long-term type investments with real estate.
Okay, that makes sense. And so then going back to revenue, so when you're assessing these projects, are you really just kind of rolling up to an annual revenue level and saying, here's my down the fairway number, here's my, home run? Sorry to mix two sports. You get the point though. And,
Yes.
and then, or do you get so granular from a cash flow perspective to have to look at things monthly and start to understand, well, in June, I'm going to have a great month probably, but in October, maybe not so much. I mean, how granular do you really have to look at this to understand?
We look at it very granular. So we look at it month by month, but we're really looking at our annual gross revenue number. Like, to your point, we're going to look at kind of that down the fairway number. And then we're going to look at, okay, what's my potential? Where am I trying to grow it? Because the revenue on short-term rentals, it takes a little bit of time to get a property established and to get it really kind of hitting its stride and running down that road and saying, okay, I'm starting to grow that income. And that's where that revenue range is a big deal for us. A lot of the times I'm shooting for a 5 to 8% cash on cash return on a short-term rental, where there's a lot more work that goes into a short-term rental than a long-term rental. And that's not a huge return, right? Comparatively speaking to what I could go find on a more passive investment. But if I've got a property and a market that has the potential in that 12 to 18 month mark, which is what our targets are in that 12 to 18 month mark, to be able to jump that revenue to 15, 20, 25% cash on cash return, now I'm more interested.
Now we're
And
talking.
so, but we also have to look at it and saying, what does it look like monthly? Because I might make the majority of my income in a 90-day or 100-day period, and I might not make much income the rest of the year. And so I have to make sure I budget for that. But also I might make decisions. I had a property up by Yellowstone National Park where we only rented it from Memorial Day to Labor Day because we knew we made 95% of our income during that period of time. And it wasn't worth it for us to keep our property open the rest of the year to have to hassle with it and get the wear and tear on the property for another 5% of income. So we would shut it down. So we make some of those decisions as well by looking at it very granularly.
Yeah, that makes perfect sense. And really just comparing it back to long-term investment, you mentioned the moving parts. I mean, so there's one thing is there's the variability of rental comps, if I'm using the equivalent term.
Yes.
But then the occupancy as well. So yeah, you are truly seasonal in income. So really it just comes down to pinpointing what the down the fairway and upside numbers are, and then making sure that your cash flow is able to, hoard when times are good and thin when times are not so good. So that makes a lot of sense. Okay.
Right. Exactly. Because I think some of the misconception is somebody will go to a beach house in the summertime and they'll pay the weeks. They'll look at it and say, hey, I just paid 3 times the guy's mortgage in 1 week. They must be just absolutely killing it. Now, do short-term rentals have the potential to make really good revenue? Absolutely, they do. But a lot of times they don't make anywhere near what somebody thinks they do when they run the calculations, because to your point, some of those variable expenses are a lot higher. And a lot of times we're calculating it based on peak season numbers when that peak season typically doesn't carry throughout the whole year.
Yeah. I mean, an example would be Breckenridge, Colorado, right? I mean, especially recently where they're not getting great snow anymore. So you might have 3-4 months out of the year where it's just humming. And then it's not. Well, that's probably a bad example because people also go mountain biking. But you get my point. Snow is season out.
Absolutely. In like the mountain towns, like those big major Western ski resorts, you've got their summer season is now almost in a lot of them every bit as popular as their winter season. The winter season is now a lot shorter than it used to be. You used to really bank on from Thanksgiving through about March or April for the winter season. Now you really are like, a lot of those Western mountain towns are really not hitting their stride until late November into like that Christmas, New Year's season. That's a whole month of revenue in a really expensive market.
Yeah, that makes sense. Well, let's talk a little bit about the physical asset attributes a little bit. So we talked about how to kind of figure out what an asset can do, but are there any kind of general rules or guidelines or just general themes of how you might pick the physical asset? For example, do I want a 1-bed, 1-bath little condo, or do I want a 3-bed, 2-bath? Does it matter? 18-bed beach house? You know what I'm saying?
And so when you're analyzing the market, in very rare cases, is one property type going to be your best bet? There's a lot of crossover in most markets. So there are a few markets that you will see that some of the bigger properties are going to do better, or some smaller properties do better. Like Napa, California is a good example. The big, large properties don't do as well because a lot of times Napa's hey, I'm going to go on a couples getaway. I'm going to go on a little, it's smaller groups. You don't have big family reunion type, multi-generational families going to visiting Napa, for example. A lot of other markets, though, you have a large crossover and cross-section of different types of guests. So when I pick our property types, I always tell people, first consider who your target audience is and what experience you're going to try to put together. If you're going to be putting together, a romantic getaway for couples, you don't need a 4 or 5 bedroom house, right? You want a smaller property. I always tell people it's logic-based investing as well. If I'm going up into the mountains, a lot of times people want more privacy, right? They want the cabin in the woods. And so don't go, unless you're right on a ski hill or something like that, probably steer away from the condos and townhomes unless they're, somebody going to a mountain town wants a cabin in the woods, right? But when you select the size and the type of property, most of the time there's a lot of crossover. The 1s, the 2s, the 3s, the 4s are all going to do well. Now, that being said, what we want to look at is we were going to still run that revenue potential on every single one of those. And then we're going to say, where's the acquisition cost? Because sometimes your acquisition cost doesn't change a whole lot from a 3 to a 4, but our revenue can, for example. And so we
I see.
might steer to a 4 because we have more potential on our revenue side, and we're not paying a whole lot more for the property from a 3 to a 4. So we do look at all that stuff, but we select our property type based on who our target audience is. If we're looking for, hosting multi-generational families where grandma's going to buy that, pay for the family reunion, we're going to want a larger house with multiple master suites, things like that. So we gear it toward who we're really trying to attract on the back end in our marketing.
All great information, Shawn. Thank you for that. And I guess we can probably all go to Vodyssey.com and learn more if we want to dive in and get some coaching on this, right?
Absolutely.
Sounds like a lot of details.
Absolutely. Yeah. In fact, on there, we've got there's a training that goes through these 3 pillars in detail on that: acquisition, the management, and the marketing. So absolutely.
Fantastic. Well, I do want to come back and talk about management a little bit, but first, let's get to the actual experience that we're providing. Because at the end of the day, that's really what the product is. It's not the property; it's the experience you provide the guests. So, tell me about that. What are some ways that after you buy the asset, you can make it sing through providing the best experience to the customer?
Yeah, and you hit the nail on the head, Chad. It is so true, and this is something that a lot of people forget about: is we are selling the experience, not the property. And you can see how many people will make this mistake when you go on Airbnb or VRBO. Those listings on Airbnb and VRBO look like they would be the same listings as you would find on Zillow, right? Zillow, we're selling a property. Airbnb, VRBO, we're selling an experience, but so few people do that. They don't sell the experience. We have to be able to put together a unique experience. And it doesn't always have to be this crazy in-your-face theme. When you've heard me talk about throughout this show, hey, we want to think about who our target audience is. What are we trying to do? Why are they coming? What can we do to make their stay that much better? And I've got that property we were just talking about up in Yellowstone that we had. That property, we catered to fly fishermen. And so when somebody checked into my property, they would come in and they would have a custom box of hand-tied flies, my favorite flies in that area. They would have a map and a handwritten note that says, hey, Chad, glad you're staying in our property. Here's my favorite, here's a map that I drew out for you, and I've highlighted some of my favorite areas on the rivers that you're going to be fishing. And so that experience was when you came in, it was all about what you were doing there. And it was fly fishing. We had all kinds of amenities like wader drying stations and rod carriers. We had drift boats. We had all the things that they would need. So they didn't have to pack a lot of this stuff that's bulky. It's hard to get to or hard to travel with. And so when they showed up to my property, their experience was going to be enhanced because they had everything they need to enjoy not just the property, but the entire area that they came up to enjoy.
Absolutely brilliant. And so, taking that one step further, so not only do we have to cater to the experience, let's say we bought the right property, we've catered to the experience, whether it's a ski mountain, it's a fishing trip, it's a hunting trip, you get the idea. If you're going to the Masters, they probably have little golf balls, tees, and mint julep stations. I don't know, right? So
yes.
Cater to the experience. But then how do we get found in such a crowded marketplace? Because you may have all this, but not be getting any bookings because you're just not ranking on the search bar, right? How does that work?
Yeah. And the way you rank is you get somebody that wants to click on your stuff. The algorithms are going to reward properties that people like, right? And so we always try to kind of figure out the algorithms to get higher rankings. Well, I can tell you, if you get booked and you get high reviews, you're going to get ranked really high. So how do we do that? What we need to do, we can buy the best property. We can put together the amazing experience. If we can't articulate it to somebody that's online and sees it, nobody's gonna come and nobody's gonna know about it. We have to be able to articulate what our experience is. Well, in today's world, we have to articulate that through photos, right? Think about how Disney sells anything that Disney does. Think about the last boat ad that you looked at, or a car ad. They don't just show the boat or the car. They show people enjoying it, right? They show people when I'm out on the lake and I'm out, smiling and having fun with my friends and my family. When I'm walking through Disneyland parks, they're not showing you all the rides. They're showing you the smiles on everybody's faces, right? That this is an amazing experience. We have to be able to do similar things with our properties, so when somebody sees that, they can place themselves in there and say, that's going to be really fun. I'm going to really enjoy that. And that's to your point before, we're selling the experience. We have to be able to articulate that. Well, in today's day and age, that means we have to do really good and different and unique types of photo shoots. We call them lifestyle photo shoots. So that when somebody sees our property, they're being able to say, okay, they don't even, almost the property is almost secondary. I tell people that when they look at our listings, that the property should almost be secondary to somebody looking at saying, man, that's going to be a lot of fun. I don't know, I don't even really care about the other properties because that one looks like it's going to be a lot of fun.
Perfect. So, I mean, really what it all comes down to is, once you've got the asset in the right area with the right potential, you got to start appealing to emotion, right? We are emotionally driven beings, not,
Absolutely.
unfortunately, we're not factual driven beings. We're emotional driven beings. And so
Yep.
not only you have to paint the picture of the experience that you think they're most likely to want to do when they come to your river or, mountain or whatever, but then you have to paint that experience and appeal to emotion so that they pick you over others.
Absolutely. Yeah. People buy on emotion. They justify on logic, right? But they buy first and then they have to justify. So you have to do both. You have to get them to want to buy. And then they have to justify, hey, why did I just pay Shawn double what his neighbor's charging me? Right. Yeah. And so we have to deliver
it's awesome,
on that experience.
Right?
Yeah, exactly. It's gotta be like, hey, well, because I got some flies that I could go throw in the river. So it's not just that, because you want to make sure that you follow through, but they're going to buy on emotion. Absolutely. 100% of the time.
I love that. And if I can add a fourth pillar, because, in my world, manage right is every bit as important as buy right, and I may have just borrowed a friend of mine's framework in saying that, but tell me how in the world management works with a short-term rental, and the specific areas I'm going to be going with this are the questions I know my listeners and investors are going to be asking. Hey, can I buy just one of these out in Colorado if I live in Tennessee and hire a company to do it for me? Or do I have to have 20 of them? And the second thing is it something I do myself, or is it something I hire someone to do for myself?
Yeah.
Let's walk through that.
So management is the Achilles heel of short-term rental investing. And it probably is in almost any real estate when you're holding anything long-term. But with short-term rental investing, it's my least favorite part of the process. Now, I'm one of the only, at least that I'm aware of, that as far as trainers, whatever, people that are educators out there teaching people how to invest in this, that really promote most people go hire a full service property manager, not do this yourself. One, management, there's economies of scale. If you own one property, you don't have economies of scale. And so with management, there's a lot of economies of scale. Secondly, short-term rental managers we're in the hospitality business. We're 24/7 concierge. There's check-ins and there's checkouts and there's inquiries on new bookings and there's all these different things going on. You will absolutely not have anywhere close to a passive investment if you try to manage a short-term rental on your own. You're buying yourself a side hustle. And so I'm always warning people about that. And so I'm a big believer that we spend the time to figure out how to get the right management partners on our team that are boots on the ground, that are at those properties. And so to your point, I always tell people, I don't manage any of my own properties. I know how to manage short-term rentals. I don't manage them for a reason, because my time can be better spent doing other things. And most people, I believe that's the case. You should not manage properties to save yourself money, because management's a huge expense. It's going in this asset, it's going to be your largest expense. It's going to be around 30% of your gross revenue. That is going to be your largest expense, even more than your mortgage and your debt pay down most of the time. So a lot of people say, well, I'm going to do it to save myself money so that the numbers look better. That is absolutely the wrong way to go about this business. Don't buy the asset if you have to manage it to make money. Second is they'll say, well, I want to learn the business. You shouldn't do either of those two things. If those are the two reasons you want to manage a property. Now, I have some of our Vodyssey family members that manage their own properties, and they do an amazing job, but they've got the personality. They want to do it. They love doing it. They want to be plugged into that hospitality game. For most of us, myself included, we go through the process of really finding the best management partners. And like I said before, it's my least favorite part of the process, because it's like hiring a new employee, right? None of us like to go through resumes and interviews and everything else, but it is one of our dream team members, that we call them, and one of our dream team member partners that we take really, really serious, because a great management partner is worth their weight in gold. It makes the ownership experience a lot better. And a bad management partner is just, it's a nightmare, and really can give us a sour taste for the asset itself.
Yeah, I couldn't have said that better. And that really spans across any real estate asset, right?
Yeah.
Yes, you can do it yourself. If you're in the business of buying assets is probably a better use of your time than,
Yeah,
go buy three
absolutely.
more rather than spending your time managing it. But, and I get it. So I assume the reason we're running more like 30%, and in some cases I've seen higher than that, like in a beach town or
Yes.
something, but
Yeah.
it's a high touch asset. This is not like we're putting a tenant in there for 3 years or even for 1 year, right? This is a high touch asset, lots of cleaning, lots of turnover, lots of messaging, all that kind of stuff. So
Yeah.
are you typically hiring companies to do this, or are you hiring individuals with your template that you perhaps teach and share?
Yeah, so there's some there's other really good trainers that teach like people how to co-host is a common term out there, and so we have teamed up with some of those top trainers out there and tap into their community, and most of them they turn into boutique management companies. So we are hiring management companies. We don't typically go with the big box, national brands. Typically, most of the time, we're looking for some of those because their business model. It's not that they're bad companies. Their business model is to maximize revenue across a whole bunch of properties. It's not to maximize individual properties. The smaller companies are more interested in maximizing individual properties. So we feel like that's a better fit for us. So we're typically looking for some of those smaller companies, or sometimes they're not even management companies. They're identifying themselves as co-hosts, and they come on and they take care of the management platform and for us and the management part of our game.
Wow, Shawn, I feel like we've only scratched the surface of this cookie here. So before we get into the Quattro questions, can you just real quickly give me a plug, drop me how to get in touch with you, your website, how to join your coaching program? Because this is super interesting, and I think a lot of people are just going to want more than a 30-minute episode is going to be able to provide on this topic.
Love it. Love it.
How would
Yeah.
we
So
find you?
the best place to go is just go to Vodyssey.com, VODYSSEY.com. We've got some awesome trainings on there. We got links to our books, our podcast, our YouTube channel, and those different things. Our coaching platform is by invitation only. So you'll have an opportunity after you go through some of that stuff. You can sign up and get on the phone with us. We want to make sure it's the right fit for you, and that this is the right asset class. Short-term rentals are like everything else. There's pros and cons to them, and we don't want people just jumping in because it's kind of the hot topic today in real estate investing. So, but you can find a lot of that stuff on there at Vodyssey.com. So I appreciate you mentioning that, Chad.
Yeah, I appreciate that, Shawn. All right, before we let you go, we got some Quattro questions for you. Are you ready?
Let's do it.
All right, first one. What is your superpower in this business?
Ooh, wow. Well, I can tell you a lot of things I don't do well. One of the things that I feel like we do really well is I'm able to look at things from a different lens, and I think that that's really helped me in the short-term rental game, to really treat them as a unique asset class, not as a single-family home that we're just trying to rent nightly. And I think that that's really helped us. I love marketing. I love business. I study a lot of businesses, and we're able to apply that to short-term rentals and really treat it as its own asset class. And I think that that's always really helped me as we dove into this, is looking at it from a different lens, is not just, hey, this is another real estate, avenue that we can run down, because it is, and it's a great vehicle, but really looking at it from a completely unique perspective has really helped us really progress, I feel like, in that short-term rental game, especially because the markets have been going up. I mean, a lot of people have been riding the short-term rental wave for a couple of years. And I think that by being able to treat them as a business, as we're seeing markets shift a little bit, we're seeing that our properties are rising to the top because we're treating them like a business, not just riding the market wave.
Fantastic. And let's pivot the other direction. So tell me about your biggest failure you've had in life or business, and what did you learn from it?
Man, good one. So I'm going to stick to the real estate investing. We'll stick to the, I told you how I lost everything. I don't want to dive into that because we talked about that, being the victim. That was a huge mistake. But early in my career, I remember doing a lot of fix and flips, and a guy came up to me, and I was, in my 20s and thinking I was the big shot in town, and showing up to real estate investment meetings and having my chest stuck out. And an old boy came up to me named George, and he said, "Shawn, you gotta calm it down, man. You got to bring the ego down a notch, because you keep saying you're this big shot real estate investor, and you're not an investor. You have a job fixing and flipping homes. So you're not an investor until you create passive income. And so it really hit my ego at the time. I was like, man, George, you and I can't be friends anymore, right? I was upset, but at the time, it actually spurred me to build a portfolio of long-term rentals. And back then, I built a portfolio in a 3-year period of 52 single-family homes, a couple duplexes mixed in there, but mostly single-family homes. And in 2005, I did this from 2000, 2002, and in 2005, I sold them all. And at the time, 2006, 7 started coming around and started crashing. I again thought I was brilliant. And looking back, I feel like it was one of the, probably the biggest mistake I've ever made in my real estate investing career was not sticking to building my portfolio of passive, passive income is the holy grail of income in real estate investing, right? Yes. But you have to build that, and it's got to build up over time. And, I did that in my 20s, and I didn't start buying passive investments again until I bought that one that I talked about in 2006, but I really didn't start adding assets again until 2012 to 15. And that's a big gap to lose when you started early and then you got out of it. And so I would say it didn't feel like a failure at the time, but looking back, I would say that's the biggest mistake and failure that I've made in real estate.
That's a very interesting take, because I'm sure you sold those properties at pretty good price, made a lot of money because we weren't crashing yet at that time. Yeah, but you converted it to liquidity rather than cash flow, and that is
absolutely. And there's nothing wrong with selling and upgrading a portfolio as long as you're putting into the same, like another cash flow producing asset. We do that all the time. But to your point, I converted it to liquidity. I spent some of it. I used it for some fix and flip stuff. We did some other things with it, but it was immediately now my passive investments were gone. I sold them all. And so now I had to rebuild, and I didn't rebuild for years.
Shawn, you lived a couple of lifetimes. There's a lot of wisdom in what you're saying here, so I appreciate that.
A lot of gray hairs here, Chad.
Well, moving on to the next question. So you are unique in that you actually have both a book released as well as a podcast. I'd love to give you a moment to talk about where we can find those and what those are about.
Yeah, absolutely. And so go to Vodyssey.com. We've got a copy. You can get all the listeners here can go there. They can get a free copy, a downloaded copy of What the Hell is a Lifestyle Asset? It's how to build lifestyle and financial freedom investing in vacation homes. You can find it on Amazon as well, but go get your free copy on our website. And the book is really a step-by-step process. Takes you through, we've got a 9-step process that we follow to take you through the acquisition, the setup and management, and then the marketing phases of short-term rental ownership. And so that's a great place for the listeners to go be able to download a copy of that and check out kind of our view of this world and that process that we follow. And then we've got a weekly podcast that we host, and you can find that on there as well. It's hosted on YouTube as well as your favorite podcast platform. That's called the Vacation Rental Revolution. And so that's we have a lot of fun with that and talk a lot of everything short-term rentals on there.
I love it. And as you guys know, we are always powered by Quattro Capital on this show, Real Estate Runway. And one of Quattro's 4 pillars is philanthropy: people, property, profits, and philanthropy. So I love to give our guests an opportunity to kind of just share your heart. What philanthropic venture are you passionate about? A lot of times our guests will actually reach out and give on behalf of the guests. So, what would yours be?
That's awesome, Chad. And I just want to, thank you guys for bringing something like that up. It's really a rare thing. I've been on a lot of podcasts. I've never been asked that. So that I think it's awesome. And I love that it's one of your guys' pillars at Quattro. And so one thing that we're really passionate about is we really are big supporters and big fans of Operation Underground Railroad and what Tim Ballard's doing over there with, trying to bring light and focus to ending human trafficking. That's something that I've got young kids and started raising my eyebrows to a little bit of that as we started to getting our eyes open to what a big problem it is. And it's not something a lot of people like to talk about. And I really love what they're doing over there. We're big fans and supporters of them. And if that rings true to anybody else, man, yeah, I'd love anybody to support what they're doing over at Operation Underground Railroad.
Yeah, Shawn, I really appreciate that. That is a heavy topic. I agree. And it's a growing epidemic. It's not even just a pandemic in this world. Yeah. So thank you for that. And folks, as always, whatever modality you're listening on, just scroll down. Everything we've talked about will be linked in the show notes. You can one click to get to the book, the podcast, Operation Underground Railroad, and Vodyssey.com, as well as I believe we'll probably have Shawn's LinkedIn and things of that sort there as well. So very easy to reach out. as we always say, everyone we bring on the show is fully vetted, someone that we know is a good provider of content, and really excited to see how potentially short-term rentals can change your life. So Shawn, thank you so much for coming on the show. I really appreciate it, man.
Absolutely, Chad. Thanks so much for having us.
All right, everyone. This has been another episode of the Real Estate Runway Podcast. Until next time, over and out.
We hope this episode was insightful and brought value to your day. If so, please be awesome and leave us a 5-star review. Find out how Team Quattro can help you at thequattroway.com. Until next time, this is the Real Estate Runway Podcast.